Welcome to Alpha Lens. It's October the 2nd and I'm Sharon. Today's market had quite a few movers and I want to talk you through 4 of the more interesting ones. Let's start with Fair Isaac, ticker FICO. The stock jumped almost 17%, closing around $1,768 after soaring more than $250 in a single day. The reason is news broke that the company plans to sell its credit scoring services directly to mortgage and lending platforms, cutting out some of the middlemen that have traditionally distributed its scores. On the bullish side, this change gives FICO more control over pricing and distribution and could translate into better margins over time. Investors also like the idea that if the housing market stabilized, FICO could capture more value from each loan processed. But there's a bearish angle too. Credit bureaus like Equifax and TransUnion may push back. Regulators could raise concerns over fairness and concentration, and the move is still more of a strategic announcement than a proven revenue stream. So the question for investors is whether this rally is justified by fundamentals or it's more of a knee-jerk response to an exciting headline. From there, let's shift to Intel. The stock rose about 4% to $37 after reports suggested Intel may do foundry work for none other than AMD. Imagine that, your long-term rival trusting you to make its chips. For Intel, this will be huge validation of its strategy to rebuild credibility as a contract manufacturer. For a bullish perspective, if AMD really signs on, it could help Intel monetize the billions of dollars it has poured into new fabrication plants, turning costly fixed assets into profitable capacity. It also aligns with broader themes like reshoring chip production and meeting demand for AI and edge computing. Still, the bears would say, let's not get ahead of ourselves. A headline about talks isn't the same as signed contracts. Intel has a long track record of execution issues, from yield problems to delays, and even if a deal materializes, margins might be thin if AMD negotiates aggressively. So here again, we have optimism about a turnaround, but with plenty of room for disappointment. Now let's talk about Tesla, which had almost the opposite reaction. Despite reporting solid delivery numbers for the quarter around 497,000 vehicles, the stock fell nearly 4% to $441. That tells you a lot about market psychology. Bulls will argue Tesla is more than just a car maker. Between software like full self-driving, its energy storage ambitions, and its brand dominance, Tesla has multiple layers for growth that justify its premium valuation. Yet bears will counter that the core auto business is under pressure. Margins are slipping as Tesla cuts prices to maintain demand, and the global competition is only getting tougher. Today's drop reflects those concerns. Investors are asking whether the delivery growth story still supports the stock price or whether Tesla now needs its other businesses to pull more weight. Finally, Occidental Petroleum had one of the deeper drops today, sliding about 7% to $44. The story here is about strategy. Reports suggest Oxy may sell or restructure parts of its chemicals division, OxyChem. Bulls sees it as simplification. By shedding non-core assets, Oxy could reduce debt, sharpen its focus on oil and gas, and potentially return more cash to shareholders. It fits with a broader energy trend where companies concentrate on high-return core operations. On the flip side, skeptics point out that OxyChem provided useful diversification, helping balance volatile oil revenues. If the company sells those assets cheaply or struggles to redeploy the proceeds effectively, investors could be left questioning management's choices. And since the core oil and gas business is inherently tied to commodity swings, reducing diversification could actually raise risks in the long run. You step back and look at these 4 names together, some patterns start to pop. FICO is really about trying to take control of the customer interface. Intel is fighting to prove it can actually deliver as a foundry. Tesla is balancing its core car businesses with these big vision optional bets like energy and software. And the Occidental, that's about deciding between focus and diversification. What's interesting is how fast the market jumps on these strategy shifts, often pricing them in before we've seen any proof. And you can see how quickly sentiment swings. 1 minute is optimism, the next is doubt. So the bigger question for us as investors isn't just what happened today. It's which of the stories will actually stick. Is FICO really changing its business model, or is it just a flashy headline? Will Intel finally execute, or are we going to be talking about the same delays next quarter? Can Tesla's other businesses carry the weight of its valuation, or is it still too tied to cars? And does the Occidental shakeup unlock value, or does it actually make the company riskier? That's all for today. This is Alpha Lens, and I'm Sharon. See you tomorrow.